Hi everyone, welcome back to the Strategic channel. My name is Lerato, as some of you may know. If you're new to the channel, I am Lerato Skansi, your investment and financial advisor. So do remember that this channel is dedicated to sharing all things that have to do with financial tips and how to manage your money from a day-to-day basis. The videos do not constitute as financial advice, but if you are in need of professional financial advice, do contact us and I will be more than happy to assist you. So today we're going to be talking about saving versus investing. I don't know how many times people have used those two terms interchangeably, but they're actually quite different. Even the most learned of us still think that saving is investing or investing is saving. So I want to break those two terms down today and then help you get started on your investing or savings journey. Basically, when we're talking about savings, this is a short-term type of, I don't even want to say investment because then I'm going to be confusing you. But when you're saving, you're actually putting money away for the short term. And short term in this context, we're actually looking at anything that is not longer than 12 months. So if you're putting money away for a need that is going to arise in the next few months or a year or so, then you are actually saving. And then when you're putting money away for the future, so this is now for the medium to long term, anything from the 2-year mark up to 6, 7 years, 10 years, or even 20 years, then we are now looking at what? Investing. So the reason why we want to break these two terms down and to separate them is because the different products that you're actually going to choose for saving or investing are quite different. And the reasons why they need to be different is there is the issue of what we know as inflation, and there is also what we call volatility when it comes to investing. So those two things can be, the things that are eating your money and you actually don't get value for money in terms of the different products that you're using. So knowing the distinction will actually help you make the right choices with your money. So let us start with the first item that we are comparing, which is the products. So normally when we're going into savings, now we're looking at type of products that are not going to have a duration that is longer than a year. So normally you have this in your banking space, which you have it as, your 32 notice accounts. You might have it as your fixed deposit accounts as well, that have probably a duration of that year mark. You have savings accounts as well. So normally when you're looking at savings accounts, you'd find that one, because of the tenure or that duration, the interest on that particular account is actually not that high and normally lower than inflation. And you know that inflation, it comes in the night and it eats away your money. Reason being, if any return that you are getting on that savings account is less than inflation, which is around 6-7% currently, it means that your money over the long term is losing value. Meaning, inflation, break it down quite simply, it means if we were buying 10 rand, we were buying a loaf for 10 rand last year, this year with a 6% increase or inflation, then you're going to be buying a loaf of bread for 10 rand 60, right? So if my investment on that other hand, I had invested 10 rand in a savings account that is earning 4%, it means that 10 rand has only earned 40 cents, right? Which is the 4% per annum. So then comparatively, there's already that 20 cents difference between the two, which means that I have lost value because the 10 rand that could buy a loaf of bread a year ago is now, after the investment, only worth 10 rand 40 cents. And there's that difference of 20 cents because the loaf of bread actually now costs 10 rand 60. So whenever we're looking to save, and hence the reason why we're saying we're looking for anything that is short term or for emergencies or for needs that are going to arise in the short term, is because inflation is always a factor. And if you're not considering that inflation, you'd find that savings products normally are going to give you a yield or an interest that is less than that inflation. Then we've discussed the type of products that you have. We have just discussed the return that you're going to get, which is normally less than the inflation. Then you have the risk. In terms of risk, the risk is very low. When it is low, this means that if you had 10 rand invested in that particular account, at any point in time when you go back, there will still be 10 rand with a little bit, tiny bit of interest on top of that 10 rand. So in terms of accessibility as well, you'd find that it's quite easy for you to access the money. If it's in a savings account, you might find with other savings products, it's just a savings product that's linked to a transactional account. So you're moving money in. If you have emergencies, you can do a direct transfer and the money is readily available for you to use. Sometimes with notice accounts, you still have to give the bank some notice so that you do not forfeit some of your money due to having to withdraw before the notice ends, you know, that type of setup there. So you do find that that is what you have with those type of products or savings products. So when it comes to investing, on the other hand, we are looking at things now where you're now playing in the stock market. So the minute you start playing in the stock market, you either investing directly in the stock market, and you can invest directly in the stock market by buying shares. You can go through asset managers who are professionals that actually now do the actual stock picking on your behalf, and then all you have to do then is to either buy that unit trust. You can buy an ETF, which are electronically traded funds. You can buy property stocks, you can buy property shares. So you can buy cryptos. For about cryptocurrencies, people who actually have enough, you know, will and courage to actually stomach the fluctuations that happen in the whole crypto space. You have luxury items as well. You know, there are people who invest in bags, there are people who invest in expensive shoes, and you'd find that like a bag that was probably worth 10,000 today is worth 20,000 in the next 5 years. So some people do invest in bags, they invest in art, they invest in those type of things in order to bring extra ching in the long run. So when it comes to return, so like I'm saying, because now you are being actively involved in the stock market, and you are involved in assets that actually appreciate with time, you'd find that in terms of the returns are higher, if I might say, than inflation. So also in terms of how they exceed the inflation will also depend on the type of investment that you have. You might be in bonds. Bonds are actually you know, the much better in terms of their return compared to your your money market or your sort of savings or short-term investments, but you still find that the yield is much higher than your inflation. You also can go into your stocks and property, which have a higher return as well, but with the higher the return also comes what? The risk. So with these types of investments, the more the upside is there, the riskier the investment is. So that is something that we also need to look at, because your risk profile, which is something that we do here at Strategica, when we do our risk profiling, it will actually ensure and determine which investment product is actually suitable for you given your individual risk profile. So in terms of accessibility, some are accessible, some are not so accessible, depending on the type of product as well. Unit trust, for instance, because these are being actively priced every single day, they are being sold, there is an opportunity for you to be selling and buying. With ETFs as well, you can be buying and selling every single day, meaning that if you feel that I need money from my particular investment, you can send that withdrawal instruction. Money will be in your account within the next 2 to 3 business days. Some, for instance, you would still have to input that notice period. Some you'd find that, okay, money is readily accessible to me, and I can get it as and when I need it. Some with certain restrictions, but different products do differ. So we will be having another video where we'll actually be going into the different products so that we can assist you in making the right choices for the different products. So then in terms of that, I think that brings us to the end of those comparisons. So here is a table that is breaking them down. So we have our savings and investments, and then we have the different products, the return, the risk, and the accessibility. So this is a table that you would want to look at and probably take a screenshot of, so that then you are able to have a quick reference guide when you are actually considering saving or investing. So like I am saying, when it comes to savings and investing, the two terms are very different. So the first step is always for you to discover why you want to put that money away. Is it for a need in the next year, or is it a long-term need, or medium term, and then that will also determine the products that you're going to use. Your risk profile will also determine which products you're going to go into and the risk you're willing to take, and then the accessibility as well. Is it something you're going to need for an emergency fund, so then it has to be readily available? Or is it something that I'm going to be putting away for my child's education? Or is it for my retirement? Or is it for my holiday? You know, we also want to be having those holidays and taking a bit of a break from our busy schedules. So it also depends, and all of that together determine the different plan that you would have for yourself or your loved ones, depending on what those needs are. So do remember that if you found this information quite useful, you can share it with friends, family, you know, siblings if you want to. Save it, download it for future reference as well, so that you have this information handy whenever you want to make these type of financial decisions and choices. But do hit that subscription button and the notification bell, so that you get notified whenever we post a new content on this channel. And do get the conversation going. Leave down your comments, leave questions below, and we'll try to attend to them as quickly as we can and try to assist you on your different financial journeys.